Hello everyone and welcome to Day Trader S&P 500. Today is December 4th, 2023. It's a Monday morning pre-market open. This is Dale Woodson, editor of Woodson Wave Report and Day Trader S&P 500 YouTube channel. As always, we want to get our YouTube channel subscribers caught up with what our paid newsletter subscribers already have. Let's start with probably the most important, the US 10-year. I want to let you guys know this is a revised count that we did over the weekend. This we used to have as wave 3. We're counting that now as a completed 5-wave pattern up to that October 23rd high. You can see this wave down here. The wave down was approaching to where it would go below the wave 1. It didn't yet, but this counts much better. Okay, so anyway, we've got a wave 2 decline here. You can see in a circle. There's our targets, and we're between the 382 and the 500. Okay, so that would be a nice place for this to land. Of course, it can't retrace the entire 5-wave rise, but this is where we are with this. Once this wave 2 down is complete, and it could be complete, or it's nearly complete in here, because that's a nice little place. The previous 4th wave you can see is between the 382 and the 500. Those right there. That upside trigger caught that target there, and the one way back here caught that one to the 1,000th of a percent. Perfect direct hit. So anyway, this is what we're looking at. Once this wave 2 down is complete, we will get a wave 3 up, and it will be huge. Okay, let's go to the S&P cash. We're looking at a weekly. You can see that A wave down, the symmetry as far as time goes, with wave B to wave A within one trading day of perfection, and both a Fibonacci 8+1 months or 9 months. Okay, interesting to note from that July high on a weekly chart, we have 13 weeks down for wave 1 and 5 weeks up for wave 2. So far the wave 2 high is held below the wave B here. If it breaks it, it's no big deal. The Qs, or the NQ futures, have so far diverged, and the only one to break above that July high, but either the divergence will continue or the other indexes will follow. We will see. But anyway, if it does go higher, then it just means this B is up here. This obvious all-time high should hold. Okay, let's get into the daily on the S&P. Here's our daily chart. Again, excuse me, there's that B wave high. There's the wave 1 low, which was within 3 points of a direct hit. You can see all these gaps here. The S&P cash has closed the 2 most recent gaps. There are still 6 more open. So that's the main thing we want to show you guys on this chart here. And let's get into the ES. Okay, here we're looking at a daily chart. I'm going to make these things bigger for you guys. Okay, all right, here we go. Here's that wave 1 down. Okay, and the trigger for the wave 2 up, and we have realized over 425 points of gain from that upside trigger. The paid customers are loving these triggers and targets, both up and down. Okay, but this up one has worked out ridiculously well so far. So far that high is on 12.1. We'll get into this on a little shorter term count. Okay, again, that 46.34 is the make or break. But again, if it's broken, that means B's over here, wherever that high is. As long as that all-time high remains, remains valid. Okay, let's go from the daily to the hourly. Okay, there we go. Now we're looking from this. By the way, the last trigger realized 444 downside points, and this one 412, or maybe it's even 25 now. I don't know exactly, but anyway, let's make this big screen again. There we go. Okay, you can see how this breaks down, and we got that expanded flat from this wave 3. You know, an A down, a B to above the start of the A wave high, and a C below the A, and then we've got a 1, 2, 3, 4, 5 here, and we'll get into this in much shorter degree of trend. We can see all of our targets there. This is either 2 or A of 2. If it's A, we'll get a B down and then a C up. Okay, so we'll watch that on the shortest degree of trend, which is 1 in 10 minutes, and this is the hourly. Okay, again, the 444 points down on the downside trigger and 400 and I think it's 25 now to the upside trigger. I haven't updated that. Okay, but let's get over to the 10 minute, and this is where we're getting interesting because this is just now developing. It's a little after 7:30 a.m. Eastern time. There is that wave 3 high on the 22nd. There's that expanded flat, the A down, the B up, and the C down, and this looks like 1 and 2 and 3, and C, you can see 4 has crossed over the high of 1. So that means one of two things: either the high was in on December 1st, or this is leading diagonal with 4 overlapping 1 and 5 up there. Okay, you can see that 5 target, and that's needs to be adjusted because this is just happening as we are recording. Okay, so that would be the 5 of 5 target there. But again, it's one of two things: either it's a leading diagonal, we're going to see a higher high in wave 5, and 5's minimum requirement is to go above the wave 3 high of 4607.75. It gains equality here as of now, and that could change. Or the top is in, and here we go to the downside. We'll watch this decline here on a 1-minute chart for our paid subscribers to signify a change in trend. What we need to see is 5 down, followed by 3 up to a lower high. Let me do this here for you guys, okay? Let me get an ABC up there. Alright, we would need to see 5 down, if that is 5, and then we would need to see 3 waves up to a lower high. Let me get that in there. There we go. And then we would need to see 5 waves down. Bear with me. To signify a change in trend. Let me put those in there. Bear with me when I get this here. There we go. There we go. Okay, so we need to see 5 down, followed by 3 up to a lower high, followed by, let me get those lines in there so you guys can see that. There we go. Okay, 5 down, followed by 3 up to a lower high, followed by 3 down to a lower low. And then there's more. That's just the very first requirement we need to see on the smallest degree of trend, again, which we do for our monthly subscribers there. Okay, so let's get you guys, and we'll be watching that today and get a report out to our paid newsletter subscribers. Okay, let's get into, let me show you guys the our report from Friday, which is a little bit of a review. Okay, we're looking for the top of 2 or A of 2 right there. This should be Friday's report. Yeah, post-market close. Okay, there's the E-mini futures. That's the hourly there. You can see a little bit of review, the trigger, and then the targets, and then here we are. Okay, 12-1. Either that high was in, that's the top of the move, or we get one more higher high. Okay, and there we are there, which we showed you guys, and that 4 now has dipped below that 1. There's that expanded flat. Okay, and that's what we're looking at there. I want to show you guys some more things here. Okay, by the way, there's our subscription services. We put out an NQ, which we'll show you next or shortly, the annual. Okay, and the monthly, which almost everyone has, video on demand. You can see we do video analysis of Tesla, Bitcoin, SMH, and XBI, in addition to all these trading and educational documents and or videos. Okay, but without further ado, let's get into the bond market report, okay, that we put out over the weekend. All right, and this was the revised count there, which we showed you guys. Okay, So far there's the actual 4.197. It's close to the 4.137. We're going to see this thing in wave 2 bottom out and then take off in wave 3 up well above the wave 1 high of 5.021%. Okay, so let's get into another report here. We did the bond. I want to show you guys the NQ, okay, because this is the one futures that so far has moved above the July high, as you can see right there. Okay, there's the wave 5 target there. We'll see if the futures just diverge. The NASDAQ cash has not moved above the July high. None of the other indexes have moved above the July high. I think the Dow may have, but we'll look into that with this December monthly report. Again, this goes to the annual subscribers, which you can see right there. Annual. Okay, we're putting out about probably an average of 6 reports a month, not just one a month, but as market conditions warrant. Okay, there's the December. A lot to cover here. Some of it's review, but some of it is new. You can see there's the weekly cash S&P again, 13 weeks down. Fibonacci 13 weeks. Fibonacci 5 weeks up. We'll see if that holds and it starts reversing. Should soon. That's been quite the move up. Okay, but and there's our C wave targets. As long as this B wave high holds, those targets remain. If B goes higher, those C wave targets obviously will be higher. There's the cash, which we showed. The last 2 gaps have been closed. We'll see if it starts putting its targets on these other open gaps to the downside. There's that direct hit within 3 points on this move down. Direct hit on that wave 4 high also. Okay, we'll go through all that. There's the NASDAQ with the alternate bullish count, which the futures triggered, but the cash as of now has not. We'll see if they'll diverge or if the NASDAQ also follows it to a new high. One thing I want to point out to everyone, and I've said this numerous times for decades now, markets diverge. That just because one makes a high or a B wave high or a higher high doesn't mean the other ones. We illustrated in 2000 to 2002, they all didn't top at the same day or the same time. And just like 2007 to 2009, the market, just because one goes up and makes a new high, whether it's a B wave high or an all-time high, the others don't necessarily follow. In fact, most of the time, they don't follow. They don't all top on the same day. Okay, so the NQ futures have made a new high. As of now, the NASDAQ hasn't, and the S&P hasn't. Okay, we'll get into the Dow. Okay, which did, by the way, and there's that wave 2 higher high. As long as that all-time high on January 5th holds, this count remains valid. You can see all the stuff there. Okay, and we move on to the bond market. You can see that revised count. This was from December 1st, and we updated that special report to subscribers there. Okay. So, and there's where wave 3 equals 1 over 7%. Gold, we haven't talked about gold in a while, but this really hasn't changed. We had that wave 2 low here, which went in between the 50% and the 618. Okay, this trigger may have already happened since Friday, I don't know, but we're looking for a minimum of 2147. You can see right here we've got 2075, 2070, and 2081. Okay, so it's running into resistance there, but once it breaks, it's going to break up into a wave 3. You can see here was the end of 4, here's the beginning of 5, and there's 1 of 5, there's 2 of 5, then we'll get 3 up, 4 down, and 5 to make 5 of 5. So that's just the minimum target for the smallest degree of trend. The highs are much higher. Okay, I think that's it for there. Okay, let's get back to, here we go. We'll see how this thing plays out. Okay, let me move this over. There we are. It's approaching 8 a.m. Eastern time. We'll see how this plays out. If this December 1st high holds, or if we make one more high to signify the end of this move up from the October 27th low. Okay, there's the big picture on the ES daily chart. By the way, there's a little bit of divergence between the cash and the continuous monthly contract here. There was a high in the continuous on the 15th and a high on the DC contract on the first. Okay, the first and the 15th. There's the first over there. There's the 15th over there. But again, we'll see. This thing appears complete or nearly so. So we'll see what this week brings. And until next time, take care, everyone.